Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, January 26th, 5:26 p.m. Eastern Time, coming to you from St. Augustine Beach, St. Augustine Beach, Florida, with the Friday edition of the Revere Market Insight video. State of the market, we're in an uptrend for nearly 3 months now since the follow-through days on in early November, November 1st and 2nd. You can see over here on the trend gauge, we've got the coveted 4 green arrows, meaning market leaders doing their job, and all 5 of the major indexes trending above on the 3 time frames that we track. That is the short-term 21-day moving average, medium-term 50-day moving average, long-term 200-day moving average. So what happened today? We had some PCE inflation data pre-market. It was slightly better than either in line or slightly better. Market initially sold off on that pre-market, but recovered to just be down a fraction by the time the market opened. We attempted a rally, but the market, after being up 6 days in a row, was due for a break, and that's what we got. And we also had 2 negative semiconductor earnings reports Thursday night, that being Intel and KLA-Tencor. KLA-Tencor is a chip equipment company, and that kind of drug down semiconductors for most of the day. They were down much more after hours last night and early in the morning, but rallied back a bit. Still down on the day though. So bottom line, tight range rest day while tech lagged. Here are the numbers, and there's a lot of yellow here, which pretty much indicates neutral. Big 7, reminder, Netflix replaced Tesla in our Big 7 as Tesla languishes below the 200-day moving average. Big 7 just up fractionally 0.1%, RG8 down fractionally 0.14, S&P 500 opened down 0.1%, closed basically right there, down 0.07, equal weight essentially flat. Only fly in the ointment today, NASDAQ 100 down 0.6, equal weight down about the same, Dow up 0.16, mid caps and small caps up 0.10, global 60/40 just fractionally down, in-house GROTECTION down 0.18%. Let's get to the charts and then the tail of the tape, and we'll wrap it up. S&P 500, you can see up here, 1, 2, 3, 4, 5, 6 up days. Tight range consolidation day at the top. We kind of needed this. Let's also bring up, since it's a Friday, the weekly charts. And you can see this is up 12 out of the last 13 weeks, coming off the bottom since Jerome Powell indicated that the Fed was looking to cut rates in 2024. Fed FOMC meeting and announcement, policy decision next Wednesday. 98% chance that there's not going to be a change in interest rates, but right now a 50-50 chance that they will cut in the mid-March meeting. But really nice rally here to all-time highs. That's the bottom line, and we can tell the difference between a risky market and a healthy market, and we've been participating in it. NASDAQ 100 break today. It had been extended, actually consolidating now for the last 2 days. Nothing wrong with this in any way, shape, or form. Dow Jones Industrial Average, first weekly close above the 38,000 level. So congrats to the Dow. Mid caps, nice 5-day tight consolidation above the 8-day and 21-day moving average, coiling for a move in one direction or another. Hasn't made highs, and also same situation for small caps, haven't made highs, but 5-day consolidation above the 8-day and 21-day moving average. This really was a slingshot move off of the lows and then pulled back about a third of the move. Now trying to regain its footing, head higher, but highly dependent on interest rates. Let's look at the VIX. VIX has basically a flat 21-day and 50-day moving average, and is just kind of chopping around, pulling up a bit as the index pulls back today, as the S&P pulled back a bit, which is in line with what the market's doing. Also the same yesterday when the market was up, the VIX was up, which is not something that happens often, but we did see the bit of a sell-off. Midday recovered, midday yesterday recovered into the close, and a tight range today. Let's look at the dollar. Dollar also in about a 2-week tight range here, coming off of the bottom. Gold continues to consolidate also, just barely down today. Gold stocks down 0.64. They continue to look awful. Bitcoin, really the standout today, uh, finished this big down move, came into the top of the prior range and bounced off there. Now it's getting into the lower end of the prior range. This was kind of a gap that needed to be filled. It was filled. Now we're coming into the bottom of this range that was set before we broke down when the ETF sell the news event happened 2 weeks ago now. So nice day for Bitcoin, up 5.62%. How about bonds? They were kind of tight today. Price down a bit, meaning interest rates up slightly. You can see how tight bonds are there. That's the broad bond index, TLT. The long bond, same thing, just down a bit. TYX yields tried to break higher Wednesday, pulled back Thursday off the 8-day exponential moving average, consolidating also. It is overbought on the daily stochastic, which if it comes off of that and heads to oversold, that's going to be uh, a tailwind for small and mid cap, especially small and mid cap growth in the 10-year. TNX also consolidating. Stochastic also overbought there. Want that to hook down, come down along with interest rates, and that, as I said, will be a tailwind for stocks. A lot of that will depend on what the FOMC says next week. December PCE, I alluded to this, in line 0.2%. 12-month inflation rate is now down to 2.6%. 12-month core inflation rate 2.9%. It's coming down. So if the Fed was trying to accomplish with the massive interest rate increases that they did, well, it did bring inflation down, and that's what they were trying to do, upset some parts of the financial system. But if Jerome Powell engineers a soft landing, my hat's off to him. Day count up 6 with a 1-day consolidation, 6 days above the 8-day exponential moving average, 14 days above the 21. Sector standout today, not much. It was kind of a mild day. Bitcoin, banks, and oils. Oil started weak, ended strong. Dollar basically flat today. Get rid of that. And then semiconductors, tech, QQQ, and real estate on the weak side. Just one buy today. Semiconductors, after they shook out overnight in pre-market, ended up down slightly from where we bought it, but seems a decent risk reward. They should hold today's lows. If not, we'll have a tight stop for that. And bottom line on the day, tight range consolidation day while tech lagged. Let's take a look at a few charts and then wrap this up. Standout on the day, Airbnb, and that's a big move up on big volume. I saw there was some job cuts that they're doing. This is a massive inverse head and shoulders right around this 150 level, which is where it paused today. So that's definitely something we'll be keeping an eye out. Other decent acting names today. Pinterest got an upgrade, closed off the lows, but near the top of the range on a day when the market really wasn't moving. There weren't a whole lot of things that were up. Some things that did ease. AMD pulled back a little bit. NVIDIA, which we also own, AMD and NVIDIA, pulled back a bit. Intel was the disappointment with its big move down, 12% on earnings. KLA-Tencor, the other chip equipment company, down 6.6% on earnings. Some things that we own that haven't been really showing much relative strength, but had good days today. Lilly back near the top of its range after bouncing off the 21-day earlier this week. Datadog, we survived the shakeout to the 10-week moving average / 50-day moving average, and it recovered its 21-day moving average today. And Affirm, which hasn't done much since we bought it except disappoint, except fake up and fade. still sitting below the 21-day moving average, but tightening up in this 40 level and 50-day moving average, providing pretty strong support there. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Our flagship portfolio is named GROTECTION because our process grows assets during market uptrends, pulls back if the market goes sideways, and protects capital during risky markets or market downtrends. If that seems like a common sense approach, reach out and give us a call, because it's not how much you've made in the markets, it's how much of that you can keep. And with that, I'll wrap up the video for Friday, January 26th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Just the facts here at Revere. Very few opinions. Opinions don't mean anything in the market. We have expectations, but we don't predict. We follow what the clues that the market leaves, like a trail of breadcrumbs. And if you know what you're looking for, you can identify how to get to where you want to go. Have a great weekend, and thanks for listening.